Good morning. Welcome to the CBEI Fall 2021 webinar. I'm really excited that you are here. We have a great presentation, a number of presentations for today. I think that you're going to find interesting. What I'm going to do some introductory remarks before we kind of get started. First thing I would like to let people know is that we have announced our next speaker in our Business and Society lecture series, and that is John List. And John List will be coming in March. Let me see if I can share the screen here. He will be coming on Friday, March 4th, between 8 and 9:30 a.m. in Sentry World Atrium. And we're really excited about this for a number of reasons. First of all, he's done a lot of great work in terms of economic experiments, real pioneer in the field. In addition to that, he's going to apply his ideas in his research to give very good practical advice in terms of how businesses, people who come up with great ideas, can scale up their ideas and to ensure their success and to ensure maximum impact. In addition to that, he's the UWSP alum from the early 90s. So he's done quite well. As you know, the University of Chicago, or many of you know, is one of the premier institutions, certainly for economics. And he's going to present what's called the voltage effect during that time, and again at Sentry World Atrium. Pre-registration is required, and seats are certainly limited. And everyone will get his latest book called the Voltage Effect: How to Make Good Ideas Great and Great Ideas Scale. But you need to certainly pre-register in order to do that. So we will have an electronic version of our report that we're sending out to everybody here today. And if you look at the inside cover of that report, you will see you will see how to register for that event. So in addition to that, just want to talk a little bit about today's two separate presentations. First, we have Kevin Bahr, who's our chief analyst here at CBEI. Will be presenting the U.S. economy like nothing that you've seen, really describing our current economic conditions and how the pandemic has really impacted those economic circumstances and the challenges that we face in terms of going forward. Afterwards, we're going to have Dr. Pflughoeft and Grace Nemecek present their special report, Data Analytics from the Depths of Motivation to the Heights of Cell Towers, which really illustrates the power of data analytics in informing decisions. In this case, informing decisions by Bug Tussel Wireless, a regional telecommunications company. In terms of specifically, they're trying to determine where they should locate their cell towers. These decisions are critical for certainly the success of Bug Tussel in terms of maximizing their revenue, but also in terms of providing greater broadband access and wireless access to rural communities. So I think you're going to enjoy that presentation. After both presentations, we will have time to answer questions. Please use the chat box in Zoom in sending your questions. And what I will be doing is I'll be fielding those questions all along. And at the end of both presentations, we will be looking at your questions. In addition, for those students who are attending for pro events or also for data analytics that are getting credit for doing so, at the end of the event, we will have Jose Vasquez Argueta. You'll put up a PowerPoint. And basically what we're looking for is your name, your ID number, and something you appreciated learning today. So we'll let Jose talk about that at the end of our presentations. In addition, as I mentioned before, everybody's going to get an electronic version of both the Zoom recording of today's event and our electronic version of our report. In addition to the reports that we're presenting today, we also have our economic indicators section that provides additional economic analysis at the national, state, and central Wisconsin areas. Also in that, we have our Insight Spotlight presentation, or if you will, article, I should say, by Bo de Decker, who will be talking about corporate social responsibility, which essentially is kind of a new philosophy that's becoming more popular among corporations, that corporations need to expand beyond just focusing on shareholder value, but and also look at other stakeholders as well, in terms of also supporting, positive environmental outcomes and trying to achieve greater social equity. So those are things that are going to be featured in our electronic version that we're not presenting today. So please take a look for those things. The last thing I want to do before my introduction to Kevin is just thank you. Thanks to a number of people who this presentation would not be, we wouldn't be able to do this. First, I want to thank my research assistant, Alexis Flatten, who's done a lot of hard work, and especially with regard to getting our electronic report ready. Also, critically important is Eva Donahoe. She's our publication and website designer. She does a fantastic job in terms of formatting the presentation and on our website, as well as help us, and also in terms of helping sharing a blog. And certainly want to thank Kevin. It's been great working with him. He's our chief analyst and blog master, and you'll be hearing from him in a minute. And also want to thank the School of Business and Economics for their support, both kind of financial and otherwise. So without further ado, I'm going to introduce Kevin Bahr. He's going to be presenting the U.S. economy like nothing that you've ever seen. Chief Analyst Kevin Bahr has been with UWSP in the School of Business and Economics for 22 years. He has a PhD in finance at UW-Milwaukee, as well as a master's in economics and a master's in accounting at UW-Milwaukee. Before joining, he had 10 years of experience at Robert Baird & Company as the vice president of corporate finance and securities analyst. And he teaches finance classes at both the undergrad level and the MBA level here at UWSP. So without further ado, the floor is yours, Kevin.
All right, thank you very much, Scott. First of all, good morning, everybody, and thank you once again to everybody for attending. So hopefully we can kind of inform you on a few things today. What I'd like to do here, if I can, is blow this up a little bit. All right, let's minimize this. All right, so what I like to do is kind of show you some graphs and show you some tables and kind of explain a little bit what's been going on generally over the last couple of years with the effects of COVID. And then I will specifically highlight kind of why things have been like nothing that you've seen, kind of both from the perspective of, we'll primarily be talking about the United States, but the United States is kind of in a global setting. And so if COVID is impacting the rest of the world, it's going to impact the United States, and whatever's going on overseas and affecting countries overseas, that's going to have some impacts on the United States. This table kind of shows you what's been going on with the United States economy since 2019. 2019, the US economy already started to slow down prior to COVID. Early 2020, COVID hits dramatically. The second quarter, the economy drops. GDP, measure of output of goods in the United States, that declined at an annual rate of 31%. That was reversed in the third quarter, up 33%. Since the third quarter of 2020, the United States has had economic growth, a little bit of a back off in the third quarter of 2021 due to the resurgence of COVID. In terms of that 2020 performance, the drop in the second quarter and the increase in the third quarter, the 2020 second quarter decline of 31.9% was the worst on record. This goes back U.S. government, through the Bureau of Economic Analysis, started tracking data on quarterly economic growth back in 1947. And that 31.9% drop in the second quarter was the worst on record. And coming in second, it's not even close. Back in the financial crisis, 2008, the worst quarterly decline was only 8.5%, so significantly less than the 31.9% drop that we had last year. If you go back to the third quarter increase that was last year, that was the strongest on record. So you went from the worst drop in the history of the United States, at least since data was kept back in 1947. You went to the worst decline in the history of the United States in the second quarter to the best quarter in the history of the United States in the third quarter. So just dramatic reversals. The 2020 economic recession, which is defined as 2 consecutive quarters of negative GDP growth. We had that in the first 2 quarters last year. That was the shortest on record. So a lot of record-setting events in just 1 year in 2020. And again, this is pretty much all the effects of COVID, what was going on in the United States, and then again, what was going on globally and how that impacted the United States. This gives you an idea in terms of overall employment in the United States. Employment peaked at about close to 155 million prior to the effects of COVID in 2020. And then employment just dropped precipitously, going from about close to 155 million down to about 130 million. Since May of last year, we've pretty much been on a steady increase. We're approaching 150 million jobs once again. Well, again, looking at that drop a little bit and then the rebound in 2020, how unprecedented was that? How bad was it in terms of that drop? It was pretty bad. Basically, in 2020, 22.3 million jobs were lost over 2 months. And again, if you put this a little bit in a historical perspective, I just think it kind of helps, kind of puts a gauge in terms of how things were, how bad things were, or how good things were. Well, in the case of the drop, that was pretty bad. We lost 22.3 million jobs over 2 months. If you compare that to the financial crisis in the late, basically 2008, 2010, 8.7 million jobs were lost over 2 years. So basically last year, we lost about 3 times as many jobs as we lost during the financial crisis, and those jobs were lost in about 1/12 the time. If you want to look at it even a little bit differently in terms of just on a monthly perspective, 20.7 million jobs alone were lost in April 2020. That was by far and away the worst month for employment in the history of the United States. Monthly employment numbers were kept going back to 1939. Prior to 2020, the biggest drop in monthly employment, 800,000 jobs in March 2009. So 800,000 jobs in 2009, that was the worst drop until 20.7 million in April of 2020. So again, the volatility is just truly like nothing that you've seen. And then the rebound, June 2020, the addition of 4.8 million jobs. Well, that was the largest gain ever. Prior to that gain, the largest gain was only 540,000. I say it only kind of on a relative basis, but it was 540,000 jobs in May 2020. So again, the scale of the ups and downs in 2020 was really unprecedented. You look at the unemployment rate just skyrocketed back in early 2020. Approaching basically 15%, and since early 2020, since about May, it's been declining steadily, now down to about 4.2%. But again, it's not only the change, but it's the volatility, which has just been crazy. 10.4% increase that occurred in April 2020 was the largest monthly increase since the Bureau of Labor Statistics kept monthly change data since 1948. So that was the largest increase, 10.4% ever. Coming in at number 2, largest monthly increase in unemployment, 0.7% in April 1958. So again, April 1958, that was the largest increase in unemployment at 0.7% until the 10.4% increase that occurred in April last year. So again, it's just kind of an insane amount of volatility. During COVID in 2020, unemployment rate increased 11.3% over 2 months. That compares to the financial crisis, a 5.6% increase over 29 months, basically between 2007 and 2009. So again, just a dramatic change caused by COVID. In terms of unemployment rate decreases, in approximately a year and a half, unemployment rate has dropped by over 10%. The 8.1% drop that occurred in 2020 alone, between April and December, that was the largest drop in any year ever. Prior to 2020, the largest drop was a 2.1% drop in unemployment that occurred in 1983. So basically, the drop in unemployment 4 times as great in 2020 than what it was back in 1983, which came in at number 2. One of the things that's been talked about with this economic rebound that we've been having ever since May of 2020, labor shortages. One of the factors that's really kind of contributed to the labor shortage, it's the number of job openings. They've just skyrocketed. This is a graph of job openings going back to the turn of the century. So pretty much until the past decade, job openings were around that 5 million level. But in 2020 and 2021 particularly, the number of job openings has just skyrocketed. And looking at this graph a little bit more detail, I mean, you can obviously just looking at the graph, 2021, the number of job openings has been off the charts. So again, you get a lot of job openings. It's going to create this perception of a labor shortage because you're typically not going to have that large of an increase and be able to fill all the positions very quickly. If you look at the raw numbers, the number of job openings in July 2021, an increase in 64% from the December 2020 level. So again, the number of job openings just absolutely skyrocketed. 64% increase from December 2020. If you want to look at the number of job openings relative to what was going on before COVID back in 2018, it's a 40% increase in job openings this year relative to when the economy was chugging along before COVID. So again, no matter how you slice it and dice it, the number of job openings, it's just gone through the roof this year. And so that certainly contributes to this labor shortage. All right, another thing contributing to the labor shortage, the quit rate. This graph shows you the Americans that have been quitting your job. So it's kind of like if you're fed up with your job this morning, well, you're not alone. A lot of Americans have been fed up with their jobs and they followed through and quit. Basically, if you look at this graph, again, you can see in 2021, that quit rate is the highest that it's ever been. This graph goes back to the turn of the century. But more specifically, if you looked at the numbers a little bit more, what's been going on in 2021, for 7 consecutive months, the quit rate in the United States was higher than what it has ever been. So a lot of Americans have been calling it quits. A lot of factors kind of play into that. Yes, there's a lot of job openings out there. So you can have some pretty good confidence that if you do quit your job, you're going to be able to find something down the road pretty quickly if you'd like. There's also been the impact of COVID in terms of family situations and school openings or not reopening. So maybe staying home with your children as opposed to getting a job right away. I think there's also a lot of people getting frustrated on their jobs, feeling really either underappreciated or not respected. There was a survey that came out yesterday for the state of Wisconsin that 50% of women have thought about quitting their jobs recently in Wisconsin. So if you're frustrated, if you don't feel respected, again, a lot of occupations, or at least a number of occupations, are respected in this country. Unfortunately, a number of occupations are underappreciated in this country. Stress also plays into this. There's, at least in my opinion, there's no doubt healthcare workers have really taken the brunt of what's gone on in the last couple of years and have been under a lot of stress. So you wrap all this stuff up, and a lot of Americans have just basically been calling it quits. It's been at record levels in 2021. There's no other period that compares to what's been going on this year for people quitting their jobs. A lot of people lost their jobs in early 2020. So is everybody coming back into the workforce? And the answer is, well, not exactly. If you look at that 55 and older category, those are the people that typically that have not been coming back into the workforce. And again, there's a lot of reasons that play into it. Could be frustration, it could be underappreciation, could be not wanting to go back to work as you feel that you might have to deal with unruly customers. Obviously, the airlines have had problems with that. You may also not want to go back and be exposed to COVID in some capacity, but the 55 and older, that portion of the population has not come back to work the way younger people, ages 60 to 24, in middle age 25 to 30, 54. Those categories have been coming back to work, but again, the 55 and older category, not so much. The numbers have increased in terms of people not in the workforce. Another factor that kind of comes into play with that is basically what's been going on in the stock markets. If you got money in your retirement account, hopefully, how have you been doing? And the answer is you've been doing really good, particularly the last few years. The S&P 500, that's your benchmark for the financial performance or stock performance of large companies in the United States. The NASDAQ, that's a heavily tech-weighted stock index. The Russell 2000, that's your benchmark for relatively small companies in the United States. If you look at all three of those benchmarks, it's pretty much been up, and away. Historically, the average annual return for the S&P 500 is between about 10 and 11%. Well, that was more than doubled in 2019. The returns in 2021, very strong. Despite the stock market being down about 20% in the first quarter of 2020, though that loss was more than recovered, and the S&P 500 was up 16%. So your retirement stock funds, if you got them, well, they've been looking pretty good. So that can be another factor that, hey, portfolio's looking pretty good. Do I really want to go back to work? No, so I'm not going to. If you look at the NASDAQ, if you had technology stocks, good for you. That was up 35% in 2019, 43% in 2020. Well, you're not going to see that every year. But recently you have, and even small company stocks, they performed extremely well. So again, it's about 50% of Americans own stock through one form or another. So a lot of Americans, about half of Americans, have benefited from the kind of the stock performance over the last 3 years. Inflation's been an issue. It's up about 6%. In particular, it has kicked in substantially since April. So what's the deal with inflation? What's been causing it? Well, first, in terms of how bad it has been, second largest increase occurred so far in 2021, about a 4.8% increase. That is second only to what was going on in 1973. Energy has played a role this year. Energy played a role in 1973 with the oil embargo, OPEC production being cut down, and you had gas lines in the United States. Anyway, a jump of 5.3% back in those days, about 4.8% currently. What's been going up? A lot of stuff has been going up. Why has it been going up? It kind of depends on the product that you're taking a look at. And right now, in all inflation, it's about 6% for increases. Food prices have gone up, car prices have gone up, sporting goods, furniture, lodging. Energy is a big one. Energy jumps, they have been huge, whether you're looking at gas, gasoline, or natural gas, those prices have gone through the roof. Energy companies cut their reserves, they cut their investments, and then you had this huge demand return in late 2020 and in 2021 that has caused a rapid increase in energy prices. And if energy prices go up, the goods of almost everything are going to go up. Because try to think of one thing that you buy, be it a product, be it food, almost everything gets delivered by truck. Energy price increases, it's going to affect everything. Another factor, this global economic rebound. It is a global economic rebound. So you have a demand for products, a demand for energy worldwide. Global GDP growth, 6% increase in 2022. That's a very strong increase. And so these oil prices and natural gas prices, they have gone up around the world. Oil prices, their highest ever, or 7-year high anyway, 7-year high globally in 2021. Natural gas prices quadrupled in Europe and Asia. So you look at energy prices, it's not just the United States. This is a global thing. So again, energy prices, they're going up here. Prices are going up here. If anything is imported into the United States, well, it's a huge increase just in shipping costs. Also, supply chain issues. Again, there have been infrastructure issues at ports, shipping container issues. You've had problems getting truck drivers. In addition to that, and I've kind of highlighted what's been going on with the automotive market, you've had a shortage in semiconductors. One of the reasons why you've had a shortage of semiconductors, a shift basically in terms of sourcing. Back in 1990, 37% of global semiconductor production was made in the United States. That has dropped to 12%. So United States corporations made the decision to outsource semiconductor sourcing. So when that happens, it's done for cost efficiencies, and it'll work if the supply chain isn't interrupted. But if that supply chain is interrupted, you have a problem. And that has contributed to the large run-up in automotive prices. And automotive basically shortages, but that supply chain, particularly for automobiles, plays a huge role in the run-up in automotive prices. And again, one thing to always remember with this supply chain and COVID stuff, it's not just what happens in the United States, but it's what happens around the world. So again, not everybody has vaccination rates equal throughout the world. If you have countries that have relatively low vaccination rates, and if you look at this sourcing of semiconductors, it largely comes from Taiwan, South Korea, China, and Vietnam. There are issues with COVID in those countries, and those issues can be reflected in supply chain issues for the United States. Pent-up demand, certainly anything that has to do with lodging. Travel exploded this year in the United States. You've had lodging increase 23%. So this isn't that much of a supply chain issue. The car and truck rental prices, that's a combination of things. Strong demand for travel. But in addition to that, that semiconductor shortage, shortage of cars. You want to rent a car? Good luck. Prices have gone through the roof. One last thing in terms of those price increases in sourcing, anything that the United States imports a lot of, for example, bikes. You want to buy a bike, good luck trying to find a bike that's actually made in the United States. So if you're sourcing that from Southeast Asia, anything that impacts that supply chain is going to impact the prices of those goods. So in terms of prices going up, why have prices been going up? A big factor has been energy costs. But again, depending upon the product that you're talking about, there's other factors that can play into why prices have gone up. All right, prices have gone through the roof. What's the impact on corporate profits? And the answer is corporate profits are at record levels, meaning that those cost increases for corporations have been more than passed along to consumers. Corporate profits are at record levels in 2021. They're about 30% higher than what they were back in 2018. So inflation's been an issue for consumers, but corporations have more than made up for the increase in their cost. All right, well, thank you very much, everybody. Again, appreciate you attending and appreciate you listening. And Scott, I will turn it back over to you.
Thank you very much for that great report on where we are today and how unusual our circumstances currently are. So what I'd like to do is introduce our speakers for our special report, Data Analytics from the Depths of Motivation to the Height of Cell Towers. First, I'll start with Dr. Kurt Pflughoeft. He's the Sentry Insurance Endowed Chair of Computational Analytics. He has more than 20 years of industry experience applying data science techniques to solve business problems. He's won numerous corporate innovation awards by solving client problems. He's also published considerably in journals like Decision Sciences, Omega, and the Journal of Manufacturing Systems. He's also taught at UW-Milwaukee, Marquette University, and the University of Texas at El Paso. With that, Kurt, I'm going to hand it off to you.
Okay, everybody can hear me? So hopefully you can see the screen. And thanks, Scott, for the introduction. I'm going to talk a little bit about data analytics at large, briefly mention the purpose of the Data Analytics Center, and then Grace is actually going to talk about the telecommunications project that we worked on together. First, I should mention, what is data analytics all about? A lot of times people think data analytics is really to support data-directed decision-making so that companies can rely a little bit less on gut instincts. But that definition's a little bit lacking. Companies have used data for many decades for decision-making purposes. So the question really is, how is data analytics any different? Well, first of all, data analysts realize that many corporations have a lot of data that has been unused. So a data analyst is going to try to leverage all the relevant data within a company, as well as external data sources. For example, on the telecommunications project, we utilized 5 external sources of data. Some of you are familiar with example applications that are developed by data analysts. For example, recommender systems. You'll see them on Netflix and Amazon. Netflix to recommend the next movie, Amazon to recommend the next product you might buy. If you look at a data analyst, they're required to have knowledge in 3 areas. Those are in yellow. You have computer programming to help with data preparation and analysis. You have statistics and probability to help identify patterns and relationships. And then you have some sort of domain expertise. Of course, that'll be specific to the company they work in, but UWSP's data analytic majors would come out having broad knowledge about business administration. You'll also see that I've added another one, which is communication and storytelling. It's really imperative for data analysts to be able to speak in a non-technical manner. And so we really emphasize this skill because they're trying to influence the way that corporations make decisions. In purple are a little bit more specific data skills. For example, we often use data visualization techniques to help tell that story. We go beyond machine learning, or we go beyond statistics and probability and use machine learning. and artificial intelligence to identify patterns in the data. And then finally, we have like data pre-processing. I mean, that's kind of a necessary evil. Up to 80% of the project could be consumed by this task. This is often true even for companies that have databases and data warehouses. But keep in the back of your mind that data is really one of the more important and valuable assets associated with a firm. So it's pretty important that we treat it as such. Now, there's probably 4 major areas of analysis. The beginning types would be descriptive and diagnostic. In descriptive analytics, we're looking to summarize either past or current results to try to derive more information and knowledge. We might do that visually through the use of dashboards that could be developed in Tableau or Power BI, numerically creating reports or indices and KPIs for a company to track its performance. Diagnostic analytics, we're trying to determine why certain problems or situations have happened. So we're trying to identify the root cause. Here, we're going to use not only data techniques, but we're also going to use investigative techniques such as fishbone diagrams. Now, it's one thing to identify a problem, but it's another thing to identify a solution. And that's what prescriptive analytics is all about. It kind of piggybacks off of the diagnostic analysis. And so this is really important. Obviously, you probably need some sort of domain expertise to be able to propose solutions. But one of the things that we recommend highly is that data analysts learn very quickly the domain that they're working in. So for example, Grace really didn't have much knowledge about telecommunications before she worked at Bug Tussel, but she learned very quickly and obviously was able to make a lot of contributions in a short amount of time. Then we have predictive analytics. I mean, obviously forecasting the future is a pretty difficult task. I don't have a magic 8-ball. I suspect I might be dating myself on that example. But one thing that data analysts have been very successful at is short-term predictions. I gave you an example of a type of short-term prediction system, which is a recommender system. Recommender systems have increased not only sales, but they've also increased opportunities for upselling and cross-selling. So the importance of a data analyst at firms really cannot be overstated. There has been a recent survey by Deloitte Consulting that pointed out that senior executives reported that analytics significantly improved the organizational outcome. There is also great demand, as you can see, for data analytics, and data analysts will be in short supply for quite some time. So that'll give you some impetus to take advantage of a data analytics center that might be at a university. So the Data Analytics Center is pretty exciting, not only for students and faculty, it's really the conduit for getting access to data analytics expertise at the university and applying it to the business community. We have internship and capstone opportunities, and we have program partners with regards to data analytics. I've listed some of those program partners below, as well as corporations that students have been employed at. And I think if you take a look at our client list, you can see that we're pretty successful, even though our data analytics program hasn't existed for a very long time. So I'm going to move on to the project. It's going to be for Bug Tussel. As previously mentioned, they provide connectivity to rural communities through cellular services and broadband access. They're located in Green Bay, Wisconsin. I also want to thank Steve Schneider, who is the CEO for Bug Tussel, for giving us the opportunity to work on this. In essence, what we had to do is that there was large lists of potential locations for cell towers, And we had to try to prioritize those locations in terms of which of those locations would have the highest data transmission rates. So with that, I'm going to let Grace actually talk about the project itself.
I just want to step in for a moment. I meant to introduce Grace, so let me do so now. I apologize for not doing it beforehand. Grace Nemecek is a data scientist at Bug Tussel Wireless. She recently graduated with a degree in data analytics from UWSP, and she is currently completing a graduate degree in data science at Michigan Technological University in the Upper Peninsula. So thank you for allowing me to introduce you.
Thank you. Good morning, everyone. I'm going to quick share my screen. And as Dr. Pflughoeft was saying, our project was prioritizing spatially determined cell tower recommendations for Bug Tussel Wireless. And this is actually the title of our current publication that's under review. And like he was saying, we needed to, like he was saying, we needed to take these recommendation lists that could contain thousands of site locations. And the recommendation list came from a national carrier, in this case, AT&T. AT&T would provide Bug Tussel Wireless with this list of, hey, here's places that maybe we could put a cell tower. And Bug Tussel Wireless now needs to narrow down that list and say, hey, which one should we prioritize that's going to increase or provide the most benefit to our customer by with throughput. Because Bug Tussel Wireless is striving to provide connectivity to rural Wisconsin, and they're actually branching out to other areas in the Midwest, but our project scope was just in Wisconsin. We wanted to help those communities most. So you can see that little graphic that I made, and that's just how I'm going to go through the rest of the presentation. First, we're going to talk about how that data was collected, prepared, how we kind of wrangled it and cleaned it. Then we're going to talk about how that data was used. And then finally, or next was how the models output and the variables that were produced. And finally, how this is impacting Bug Tussel Wireless and what they plan on doing in the future. So this is probably the driest part of the project, I thought, but the data collection is necessary, right? No analysis can be done without the proper data. So the one thing to note on this slide is that all of our data only cost $49, but at the expense of cheap data came a lot of data cleaning. So the USBIS data was purchased for $49, and it gave us almost every business in Wisconsin with their address and the approximate number of employees that business had. And what that allowed us to do was see if the businesses that neighbored a tower were medium or large, or what industry they were in. So just to note, I am going to be saying neighboring or neighboring a tower or being a neighbor, and that kind of just means within a 5-mile radius of the tower itself. So I'm going to move counterclockwise around this little graphic that we have here. So the next set of block is the census data, and the census data was kind of used to just capture different customer demographics around the towers. So what's the population there, or what kind of people are we seeing, and things like that. Next was just miscellaneous data about the towers that we currently have. So the height of the tower, where that tower is located, its longitude, latitude coordinates. Next, we had the Federal Communications Commission, which is also known as the FCC, and we use this on 2 separate occasions. One, we used the API, which I would recommend if anyone needs it. It basically, you put in a longitude, latitude coordinate, and it produces what county and census tract along the census block that longitude, latitude is in. So it's very easy for us to grasp where in our census data that one tower was going to be located. The second account was using a different website through the FCC on seeing if where a tower was placed, would individuals there already have relatively fast in-home connectivity services? May that be through broadband or satellite internet? And could a person having relatively fast internet impact their cellular data usage? Next, we're going to look at the Wisconsin DOT and traffic and Google Maps. The Wisconsin DOT was used for traffic counts. And of course, we don't want to say, hey, use your cell phones while driving, but there are nice ways or more safe ways to use your cell phone wirelessly through like Bluetooth or even passengers in a car. And then Google Maps was used to take a screenshot of what was around a tower to basically say, hey, what's around this tower that could be recreational, or why could people be going to this tower for, say, a lake? Because we added this into our analysis because the data that we had was during the pandemic, and we were, even though there's a work from home ordinance, we were seeing spikes in outdoor recreational areas. And we kind of assumed like, hey, that is a safe space where people could go outside and get some fresh air and maybe get some work done. So we could maybe see if that was having an impact in the model. And then finally, Open Cell ID is just a website that we wanted to use to see if we could grasp competitive landscape. So Cell ID allowed us to see where towers kind of were in proximity. This was deemed not significant because the website only gives you how many cells are around it, not where the tower is. So a tower can have a wide variety of cells, so it kind of just wasn't practical. So here's the fun portion of the project, I think, really getting down to the models. And we decided to build a predictive and an explanatory model. The explanatory model was probably what Bug Tussel used the most in the end, just because it really indicates what variables we should be looking at in the future. And I'll kind of touch more about that on the next slide. But I kind of just wanted to go through the models and the variables in them one by one, kind of grouping them by where the data sets came from. So the census data, population by county, percent of Caucasians, percent of homeowners, percent population over 65, percent of people with at least a bachelor's degree, percent of people with at least a high school diploma, and the mean travel time to work. Those were all collected from the census data. And you can see those little indicators indicating county or tract, and that just means if we took the county variable from the census data or the tract. And not surprising, population came out very significant. Obviously, if you have more people surrounding a tower, the more throughput there's going to be. However, this is a little bit counterintuitive with our goal, right? Bug Tussel Wireless wants to provide services to rural customers, and rural doesn't have many people. The next thing to note, you'll kind of see a little bit of a span between the colors of the census data. So purple is just indicating what is going to our explanatory model, those variables that we really should be looking at in the future for where we place cell phone towers. And then the yellow had sign reversal issues. And for those who don't know, sign reversal is just when the model produces a beta coefficient of the opposite sign you would think, which usually would mean there's some type of multicollinearity issue. So that was a little bit on that. Next variable I want to talk about is that business indicator. We got that from the US Biz data, and basically it was a categorical variable that we created to say, hey, where is a medium to large size business? Like, is it neighboring our tower? Next, I want to talk about the lake indicator. That's what we got from that Google Maps screenshot, basically saying, is there an outdoor recreational area that is impacting this spike that we're seeing in revenue? Because again, this was during the work from home ordinance and people were trying to still get outside and be safe while we were in the midst of the pandemic. Next, that cable internet above 100 megabits per second and the satellite internet speed above 100 megabits per second, that was collected from that FCC website. Again, we wanted to answer the question, if someone had in-home broadband services, was that impacting their cellular data usage? The count of neighboring Bug Tussel Wireless towers was of the same idea of the Open Cell ID. Open Cell ID was deemed not significant, like I had said in the previous slide. However, this was deemed significant, and we are thinking it's relative to the network Bug Tussel Wireless is creating on transferring cell phone calls one to the next. Next, height. Height was surprisingly not significant and in the predictive model. And after some research, Dr. Pflughoeft and I weren't surprised by that, because once you reach a certain height, you're never grasping more of a landscape, because a tower can only have a 5-mile reach in any direction. So obviously if the tower is 10 feet off the ground, you're not going to reach 5 miles. But once you're a certain height in the air, it doesn't really impact that much. And that's kind of what I wanted to talk about for the variables, but kind of looking at what our models came out to be. 54% on the predictive side and 40% on the explanatory side. And then our out of sample with the press statistic was 46 on the predictive side and 34 on the explanatory side. We were very, very excited about that, how much our model could explain the variation in throughput through the variables that we chose. When I introduced this project to Dr. Pflughoeft, we were hoping for maybe an R-squared of 30%. So considering that we can get 40% of in the explanatory model, I'm very pleased with that. So like I said previously, Bug Tussel Wireless really wanted to look at the explanatory model to say, hey, what things can we be looking at the future? So I'm not sure if I mentioned this already, but Bug Tussel Wireless uses an in-house KPI called retainability previously to when we produced the model. And retainability is basically measuring how well the network is around in certain areas. So can I hand off a cell call from one tower to the next without dropping the call? And that's great, but they kind of wanted a better measurement or better variables to look at than the in-house KPI, because you can't really predict retainability. So Thiel's Sen variable importance was used to produce this graph. And just a little bit of a side note, all of the numbers here would add to 100% because those are the 6 variables that are being used in the explanatory model. One thing that's kind of interesting is that indicator indicating the medium to large size businesses neighboring a certain cell phone tower seems to be more important than even population, which was kind of great in this case because, again, Bug Tussel Wireless really wants to provide connectivity to rural communities. Now, this, obviously I just stated the KPI, but this is helping Bug Tussel Wireless immensely now. They're really seeming to grasp onto what variables we can be using in the future to help us better narrow down that recommendation list that we're getting from AT&T. So one thing that they were looking at previous to, but didn't really realize how important they are to investigate prior to building a tower, is where those recreational areas are and where those medium to large size businesses are. Finally, Steve Snyder, the CEO of Bug Tussel Wireless, was very pleased with the project. You can read his quote there, but I'll basically sum it up that he is very grateful for the partnership with the UWSP Data Analytics Center, and he is really hopeful that we can continue partnering with the UWSP Data Analytics Center and also continue making data-driven decisions. And on my front, I am very excited to help the company grow through data-driven decisions, as well as the company helping me grow professionally in my data science experience. Thank you.
Great job, Grace. That's fascinating analysis. And thank you for sharing that with us. Well, we do have several questions, and what I'm going to do is offer the questions first to Grace and Kurt, and then we'll have some questions for excuse me, for Kevin afterwards. And then for those students, please be patient, and we'll have Jose share his screen after we go through the questions. One question, this is for Grace and Kurt. Why did IBM cancel their Watson data analytic project? And this comes from Ed Miller.
Well, Watson actually has some really good technology. It was kind of showcased on Jeopardy. Probably a lot of people don't realize how advanced Watson was, especially with regards to natural language processing and did a fantastic job at that. I think and we also know that Watson had some successes with regards to customer attrition as well as detecting fraud. However, I think they kind of overpromised the technology. I mean, that happens a lot of times. I think they got involved with a hospital in, I believe, the University of Houston, and they were trying to detect, for example, why cancer might be prevalent or how you diagnostically determine it, et cetera. And they spent hundreds of millions of dollars on this, and it really didn't lead to anything. So I think, with data analytics, I always tell clients, don't go into it saying, let's just find something of interest. Have a very, very specific goal as to what you want to accomplish, and start out with a smaller project so that you can have a success. And then once you get a little bit more comfortable with it, you can kind of expand from there.
Hey, Kevin, we have some questions for you. The first is from Gary Mullins, who we miss very much. He was a professor of finance, just recently retired. And Gary writes this, there's two things. First, with a 32% decline in real GDP for, I think it was second quarter of 2020, and a 33% rebound in the following, GDP was still less than 10% less than it was prior to the decline. So he's asking, well, why is that the case? And then secondly, he asks a question, the second question is, some people say that the increased unemployment benefits drove the labor shortage. With the decreased benefits now gone, why does the labor shortage persist?
Well, thanks, Scott. Gary, we miss you. I hope you're doing well. First, in terms of that, those economic benefits, about half the states in the U.S. decided to end the economic benefits early prior to September. And there were multiple studies done. There was a large study done academically by researchers out of Harvard and MIT. Then there was also a study that was done by a private company, UKG, a payroll and time management firm. And they basically both found the same thing, that the unemployment benefits really were not a primary factor in the decision for people to go back to work or not. So those benefits really did not have a major impact on the workforce. Instead, there were other factors that came into play, things like job stress, people getting burned out on the job, a concern in terms of going back to work in terms of either co-workers or unruly customers being exposed to COVID. I think a lot of people also rethought their career decision. This was a time to kind of reflect, do I want to keep doing the same thing, or do I maybe want to retrain for a different career? In addition to that, like I indicated, kind of the strong stock market performance. And again, a lot of relatively older Americans in that age group of 55 and older, they just decided, I've had it, not going back to work. So I think it's a collage of factors, but it's really those employment benefits were not a primary factor in people staying out of the workforce. And again, that's multiple studies that showed that. In terms of GDP growth, still, as far as the economy coming back to say where it exactly was pre-COVID, economy has made some major strides in doing that. Good rebound in terms of we've had almost 20 people rejoin the workforce since early 2020. In terms of reaching kind of the GDP level that you'd like to reach, that I think is still going to take some time. You're still in an economic rebound. Third quarter GDP growth in this country dropped off because you had the resurgence of COVID. You still have kind of a labor shortage out there. So I think in 2021, hopefully things will kind of get back to normal. And by getting back to normal, kind of a settling of prices, a settling of the labor market, you won't have dramatic kind of global economic rebound. I think when when factors come into play, kind of be more normalized relative to what's been going on in the last couple of years, I think then you're going to see GDP growth kind of surpass anything that occurred before COVID.
Okay, got one more here for Kevin. Is it expected that inflation rates will continue to go up beyond 2022 or return to norm? Will these prices be here to stay? This is from Corey Huck.
Okay, thanks, Corey. I think the key item in there is that 2022, beyond 2022, because 2022 more than likely is going to be kind of rough. You're still going to have supply issues. You know, when you have those supply chain issues, like I mentioned, that semiconductor problem, the U.S. sourcing or before was making 37% of the global semiconductor chips back in 1990. That's done about 12% now. There's really not an awful lot you can do to adjust on that in the short term. I mean, yeah, long term you can do more onshore sourcing, but a lot of these supply chain issues, if they're impacted by COVID, and if COVID stays around, you know, if COVID would go away tomorrow, a lot of these issues would be resolved pretty quickly. That's not going to happen. So some of these supply chain issues are not going to go away overnight. The infrastructure should get better. We've got a big infrastructure bill that was just passed. So hopefully problems at ports, railways, again, more people I think will be returning to the workforce, but that's all going to take some time. So I think 2022 you're still going to have some issues. You might see the Federal Reserve increase rates, interest rates in the fairly near future. I think beyond 2022, and again, the key word here is just to get things more normalized, less volatile, less uncertainty. Energy prices in the last couple of months, future prices have come down generally, a little bump up recently, but again, that would be an indication that you shouldn't have this large volatile increase in energy prices going forward that you've recently had. So again, by 2023, hopefully things become more normalized and settle down. The 2022, you're still likely going to have some bumps in the road, especially in the first half of the year.
Okay, we have a couple other questions for Grace and Kurt. This comes from Kyle. Why was linear regression determined to be the best model for the data?
Well, I guess I can answer that. I don't know whether it was really the best model. Actually, on the slide, there was some machine learning techniques that actually had higher out of sample performance. However, the thing is that even though we are using the predictive model, I think what was a little bit more valuable for Bug Tussel was the explanatory model. And many of the machine learning techniques are black boxes. In other words, they really aren't used for explanatory purposes. But of course, if we just use predictive, it is possible for us to use the machine learning model. In fact, we used something called SassJump Pro, which tested 11 machine learning techniques and picked the best one from that.
Okay, this one's to Grace. Will the influx and relocation of people to the Northwoods and rural areas of Wisconsin, including waterfront properties recently as a result of COVID, will have an even more of an impact than on tower placement? And this is from Leah Rose.
Thank you. Sorry about before, the Zoom had frozen, but to answer Leah's question, I would say that it's something we should continue to look into, because although the work from home ordinance is no longer in effect, we are still dealing with COVID, but a lot of jobs people are seeing they can continue working remotely. So considering they're in their second home, I don't see that trend really going down anytime soon. And like Dr. Pflughoeft put there, that we did see that transmission of throughput because of the start of the pandemic, but I don't think it's going to decrease after, which is why I think it's still something we should consider at Bug Tussel Wireless.
Okay, great. Well, thank you so much for the presentations. That's the end of our questions. So again, really terrific stuff by all presenters here, and Grace, you're doing us proud here at UWSP. Just want to let you know. So I'm going to let Jose come on and talk a little bit to our students.